This is the S&P versus we series. So let's start by looking at how the portfolio did today. Today, I think we did very well. We did 1.31% on the day versus the S&P, which is 0.41%. That is a very good return. That is close to 3.2x. 3.2x on the day. Fantastic. You know, eventually I'm going to lose to the S&P. I can't beat it every day. This is 6 days in a row of beating the S&P, so I'll take it. But eventually I will lose to the S&P, but today is not that day. Not by a long shot. Okay, so let's take a look at some of the top performers. If I sort by target percent, this is what I had anticipated performing well today. And if we just do a quick scan, the top half-ish, by the time you get to 2, these are like the remainders. So these are expected to just be mean reversion, or dollar cost averaging into them, waiting for them to perform. These are the top performers, and we're putting our money in the fastest ones, which currently are silver and gold. And they top the charts, so fantastic. They're still going strong. We've got materials, which is, we expected to do better. Small performance today. It did mostly flat, but looks like they wanted to fight it. The price was trying to go down, and we recovered throughout the day. So that trend might still be established. It might be losing steam. We'll see. We've got international small caps. Okay, not sure why that's rallying today. Let's see what the top holdings in that are. Top holdings. Gold. Okay, so gold and silver. That would explain it. So it looks like we're doubling down on the gold and silver exposure, which is totally fine. Bit of a side tangent. The reason why I hold gold and silver specifically separate from equities, because there's many commodities that are up. Palladium is up, you know, but I don't want to hold all the inputs. I want to hold the companies that make use of those inputs. The reason I hold gold and silver separate is because gold and silver are held just to be held. Nobody's really stocking up on palladium in their you know, in the banks of the world. Nobody's stocking up palladium. Nobody's hoarding wheat in their basement. So that's a bit of why I hold them separately. Anyway, emerging markets. Let's see what's going on with that. TSM was up 1.69%, so that would explain it. The top holding for emerging markets is up. International is very strong right now. U.S. economy and international usually take turns. When one is up, the other's down, and vice versa. International's been on a bit of a tear lately. Today was the first day where we had a really strong pop in the U.S. markets, and then we're going to start seeing just sort of random ups and downs as we get to our smaller holdings. Ethereum is up huge today, 4%. Fantastic. That's why we never sell out of these positions. We always hold a minimum position size in case a trend starts. We don't miss the initial pop, and then if the trend continues, we can continue to add to it. So it looks like crypto's finally getting some love. I know a lot of people were concerned that you know, crypto wasn't fulfilling its store of value proposition, or its chaos or fear hedge, because gold and silver have been capturing most of that. But as gold and silver continue to rise, I'm pretty sure people are going to feel overstretched as the valuations have just skyrocketed. They're going to look for other places to put their money, and I think crypto will be next. Let's take a look at the spreadsheet. Volatility is, fear is leveling. It was obviously maxed out during Trump's Greenland initial tweets. We saw a huge reduction in fear as that was kind of played out. And now we're kind of leveling off, which means that's affecting our DCA rate. Our DCA rate is coming back down a little bit, slowing down just a smidge. We're down from roughly 2% a week to a little bit less, 1.88% a week. So we are slowing our investments. Goodness gracious. Silver is doing insane. Up 32% over the past month. Gold has been lagging silver as it's supposed to, but it's starting to pick up speed. Gold had been, shuffling around the upper echelons of the allocations. Strong international performance. These are all pretty much international. Exception is materials US. Canada is accelerating, so that's going to get a higher position in the portfolio. It was down here with the mean reversion. Communication services, that's your Google and Meta. It's starting to see a pop, but it's been down here for quite a while. We do have a broken trend for healthcare. So it was already down, so it's just more down. Healthcare is not getting any love. That's fine. It has a 2% holding as of yesterday. I have not updated these weights yet. So today's results, pretty good. Everything that was doing, poorly, we're dollar cost averaging into. And everything that was winning is continuing to win. And the middle is seeing a little bit of churn. Not a big deal. Let's go ahead and update these scores so we can see our new portfolio weighting for tomorrow. Silver and gold coming down a little bit. We're sharing the love for these new holdings as they move up. I just see a lot of international acceleration right now, probably as a result of U.S. markets slowing down. But we may see some rotation out of international back into U.S. because of the rise today. If we compare it to the iShares MSCI World Index, the top half of our portfolio is still beating the World Index. Let's take a look at easily 82%. That's the value of a world diversified portfolio. U.S. economy, not the economy per se, but U.S. stocks not doing so well. Well, overseas doing great. We shift towards that. We capture that value. 82% of the portfolio beating the S&P, and then QQQ just for fun because it's historically been such a strong performer. Still, 73% of our portfolio is beating that. Okay, so let's go back to the world index here, and these are our companies and their weights. Go back to this. I like to use this format so I can quickly go through my portfolio and make the minute changes for each holding. Okay. Still a pretty chill day in the market. This indicator is backwards looking, and this one's more forward, but they're starting to realign. It's just kind of flat, neutral. No excessive fear, no excessive greed, just chilling. Let's compare our portfolios performance on the week. We are 4.36% compared to the world indexes 2.58, going strong. Vanguard on the week, double that, going strong. And QQQ. All right, QQQ giving us a run for the money. 3.61 versus 4.36. Still winning though. That's pretty much it for today. I'm happy with the performance. Doing good, going strong. Portfolio executing. I think every day I'll aim to get these videos out as soon as possible after the market is closed. Maybe on Mondays, I'll do a deeper dive into different aspects of the spreadsheet and the model, what it looks for, how it prioritizes things, how it works, philosophy behind a lot of these things. But on the day-to-day, it's just going to be just tracking, did we beat the market? Anyway, thank you for stopping by. See y'all tomorrow, and let's keep beating the market together.